Should you invest in gold? Here are some investment considerations. In this video, we'll take a hard look at why you should or should not make a gold investment. First, I am an investor, not an advisor. This video is for information and entertainment purposes only. My opinions are my own, and be sure to investigate, ask questions, and make sound decisions on any investment. In a moment, I'm going to show you how I have allocated one of my portfolios and why I did it that way. But first, let's look at some of the principles that I've been covering in the last 9 videos. Principle number 1. Gold holds value. Gold does not produce value. This is a distinction that many investors miss. Gold does not produce dividends, and it does not produce goods or services. Gold is a commodity. It will hold on to the value of its commodity, but over the long term, a stock in a company that produces revenues for an investor, and if that investor reinvests those dividends, holding that stock will do much better than gold. Principle number 2. In the long term, you will make more money investing in stocks than with gold. That's because stocks are productive and gold is not. Principle number 3. If you believe the economy will become inflationary or unstable, buy gold as a tactical play. Principle number 4. If you believe the stock market is going to crash, buy gold. Principle number 5. Do not buy gold in a strong economy with low inflation. Principle number 6. Allocate a prudently small amount of your portfolio to gold. Earlier I said we would cover how I have allocated one of my IRA portfolios in 2020. So when I first studied the charts that I've shown you in the last 9 videos, I actually became frightened of what was going to happen to our economy. And as I've been reading news reports and following the COVID crisis and the economic collapse, it has become very clear to me that the stock market is completely disconnected from and disassociated from reality. The only reason the stock market is doing as well as it is because the U.S. Federal Reserve is propping it up. When something happens and the Fed can no longer prop it up, or there's going to be some shock external to the Fed to the world, such as more pandemic surges, then it's my belief that the market is going to crash, and it's going to be a crash that's going to be far worse than the 1929 depression. So I took one of my portfolios in which I had approximately $120,000, and I directed my advisor initially to cash out. I said, I just want to be in cash. And then a day later, I said, put me into $40,000 of gold and ETFs. And so right now, in this particular account, I have $40,000 in gold, 66, or approximately 2/3 in cash at $80,000. So it's a 1/3, 2/3 allocation. Now this is not my entire wealth or my entire portfolio. It's just how I've allocated this one portfolio. And I want to go through with you my thinking on this, and then to give you guidance and maybe help you think about how you might approach it. So here's the rationale for what I did. First of all, I believe, based on everything that I'm reading, that the stock market is going to crash in 2020 to depths not seen since 1929. Now I remember back in 2006, 2007, I was looking to purchase a home in Central California, and the house prices just did not make sense to me. The economic condition of the region was poor. Salaries just could not justify what was going on. And I was talking to colleagues who were talking about house flipping, and I hadn't done any study. And this was before the movie The Big Short, right? And I had not done any studies, but I knew instinctively from my own knowledge and experience in finance that the housing bubble was going to be a big, huge mess. And of course, it was in about a year. I have the same feeling about the stock market today. There is nothing that I see out there that suggests to me that the stock market is on a sustainable long-term course. Like I said, the only reason that the market is moving forward is because of Fed stimulus. The CARES Act in April of 2020 slowed down unemployment, but as we just know from the numbers released a couple of weeks ago, the unemployment numbers were grossly understated. We're probably sitting at between 16 and 20% unemployment. The stock market is ignoring all of that. My guess is that the crash is going to be politically motivated if Biden wins over Trump. Now, this is really cynical, but if you think about it, and I'm not going to tell you where my political inclinations lay, but just think about what happened when Obama took over from Bush. Obama took over from Bush in a huge economic collapse. And it took him 8 years to, whether you agree with it or not, it took 8 years to dig out of that. And Trump was handed an economy that was performing pretty well. It could very easily happen that a political decision is made by somebody somewhere to withdraw support for the stock market, and it could collapse. So it could be politically motivated. It might not be politically motivated. There may be some extrinsic shock that nobody can predict, probably a huge covert surge that causes the house of cards to fall. It will be caused by any number of shocks if Trump wins, because the Fed cannot continue to sustain the stock market in the same way. So it doesn't really matter who wins the election in November of 2020, there's still going to be a crash. Inflation is non-existent. So the risk of holding cash is nil. I can afford to be in cash because my buying power is not being eroded by any kind of significant inflation. And what's really interesting, and that's why this economy is so weird, interest rates are at near zero. So debt securities are worthless. I can't invest in bonds, or CDs or any kind of other normal cash or cash equivalent investment because there's no return on investment. So holding cash is essentially the equivalent of being in holding a bond security or a treasury bond or something like that. And of course, there's no risk to holding cash right now. And I've never seen this before. We have zero inflation and we have zero interest. And so holding cash is almost really the better investment. I'd rather forego short-term gains in the stock market than see my portfolio value decimated by a market crash. I am convinced there's going to be a market crash. You may not be, but I am. And I would feel a lot better sitting on cash that maybe isn't growing for 6 or 7 or 12 months than to see that cash cut in half or cut by 2/3 or even cut by 75% if it were invested in stocks and the market crashes like the way it's going to be. And you know something, if you look at all the players like Warren Buffett and some of the big hedge fund managers, they're all out of the market right now. They're sitting on the sidelines in cash because they see something that most people don't see. So for me, being in cash right now is a smart move. Also, the risk of losing value is nil right now with cash and gold. This isn't going to be true forever, but for the time being in cash and gold makes a lot of sense. And some small part in gold, just in case something happens to the dollar, unexpected, the value of the dollar, having gold as a backup hedge just seems to be prudent. And it also seems to me that the lost opportunity cost that I would lose by remaining in the market is more likely than not going to be wiped out by the coming crash, because nobody knows when the crash is going to happen. And once it starts and accelerates, getting out is going to be really, really hard because there aren't going to be many buyers of stock out there. And here's the thing that's probably most soothing to me, and that is that if I'm wrong and all the players in the market are right, I can move back into the market at any time. From a cash position, I can liquidate the gold, I can turn it to cash. I can take the cash and with a push of a button be back into a well-diversified stock portfolio. So moving back and forth is not that difficult. The most important thing to do, and this is what I did, is make sure that you consult your financial and tax advisors before making any investment decision. What was interesting for me in my conversation with my financial advisor was that I said, where am I wrong? And he said, you're not wrong. It's just a question of timing. And you're taking a slightly more conservative route than a lot of people are taking. There's a lot of greed out there, so people are going to hang in, try to squeeze the last penny they can out of this crazy market, and a whole bunch of them are going to lose a lot of money. So there you go. So let me know whether this video helps you by making a comment below and by liking the video. And if you like this video, subscribe so that you can be notified of my upcoming videos. This is the end of my 10 video series, so we're just going to watch and see what happens. I'm going to be producing more videos in the weeks ahead, so be sure to watch them. I'm going to be looking at investment opportunities in gold and comparing different types of things, different types of opportunities, so that you can get a little bit more information and decide what you want to do. And as the economy unfolds and history unfolds in front of us, we'll see whether or not my predictions are correct. Thanks for watching. Be sure to stay tuned for future videos as I produce them. We'll see you later.